All right, guys, this is it. I apologize for the hiatus. Lots of moves. We'll get into that in a second, but the Monday Mortgage Minute is back. If you read this week's Mortgage Vet Weekly, you already know that there's a lot to cover. Big personal news, rates hit a 3-season low. The Fed just held, Powell is stepping down, VA changed appraisal rules effective Friday, and down payment assistance programs are just sitting on the table in every state that I operate in. So let's go ahead and go through this. First and foremost, the announcement. Effective May 1st, I joined Milestone Mortgage Solutions, an amazing company out of Bedford, Massachusetts. I'm not going to dress this up. The environment that I was sitting in was one that stopped serving my clients in the way that they deserved. There were limited products. Pricing wasn't always very competitive. There was friction on the back end where there shouldn't have been. It should have been support. And when that happens, you've got two choices. You're bringing a problem to the table. Do you have the solution? You can either accept it or find a room that's actually built for the work that you want to do that matches your mentality, your business structure, and your ethics. So I found that room. Milestone has some relationships with the biggest companies in lending, United Wholesale Mortgage, Kind Lending, New Res Financial, NewFi Financial, PennyMac, you name it, we've got the options. And what that means for you is simple. I have the flexibility of being a broker and the control over pricing of a direct lender. More products, better pricing, now serving folks in 30 states. That's right, 30 states. So if you're moving from here to Florida, let me know. We can get you taken care of. Same phone number, same mission, same methods, just better reach, better outcomes. On to our rate recap. Now the market last week was the headline of the spring. Rates opened at 6.23% average on conventional mortgages, according to Fannie and Freddie, the lowest reading we've had in 3 consecutive spring seasons. By Friday, the 30-year closed at 6.30, up 7 basis points, and the bond market processed the Fed's hold as far as not cutting any interest rates and started pricing in the uncertainty that comes around incoming leadership and leadership change. Here's a comparison that actually matters. As of Friday last week, 1 year ago, the average rate was 6.76% on a conventional mortgage. The buyer sitting in front of me right now is roughly $115 to $140 a month better off on a $350,000 loan amount than they were a year prior in the same house at the same price. It's the same income, same home, better math, and more affordable. That tells us our market is cooling. The bigger picture underneath that story is the rate move. Purchase applications are running more than 20% above last year's historical levels. That is the clearest signal that we have had that buyers are coming off of the sidelines and the market is moving and prices are cooling. It's a great symbiotic relationship for us to have right now. All right, let's move on to the Fed meeting. April 29th was the Fed meeting, and they held interest rates at where they are. No change, no cuts. But it was a divided vote, and it's that division that actually matters to what comes next. So the vote was 8-4. The Fed governor, Stephen Miran, he wanted to cut by 25 basis points. Cleveland Fed President Beth Hammack, she wanted to remove the easing. I'm going to try to say this, Kashkari, the Minneapolis Fed president, also wanted to remove easing. And Lori Logan, the Dallas Fed president, also wanted to remove easing. What does that mean even? It means that they all recognize that the market is in a place where we can cut some rates and it's going to be okay. But the uncertainty, right? Powell said he's not going to do it. That's where we're at. He had the votes and we're kind of stuck with it for the time being. So it's widely expected that this was Powell's last meeting. His term ends May 15th, but here's what's really unusual. He's not walking away. He's staying on the board through 2028, which keeps him in voting, and he gets to have a say in monetary policy. And in his words, things that happened in the past 3 months have left me no choice to stay on until I see them through. Most departing chairs jump out entirely. Their term ends or they resign and that's it. They're done with the Fed. We bring in new blood, new ideas. The Senate Banking Committee has voted 13-11 to advance his successor, Kevin Warsh, to the next stage, and that's pending a full vote in the Senate. So why does this matter to you? Like we've talked many times, the Fed does not set mortgage rates. Bond markets do. But chair posture moves these bond markets. Activity, comments at the podium. That's what moves the market, not necessarily the rate cut. Warsh has publicly argued there's plenty of room to cut federal funds rates without sparking inflation. If he moves on the cuts in the back half of 2026, mortgage rates have some room to follow, but this could be fall, this could be winter. Fannie Mae's sub 6% year-end forecast still assumes that there's some easing, but Fannie's now got a lot of ground to make up to hit that sub 6%. We've only got a few meetings before the end of the year. That thesis, however, remains intact. There's just more near-term noise than there was a month ago. Let's talk a minute about the down payment assistance programs, right, and FHA loans. So pivoting over to first-time buyers, this has to be the question I get most often on phone calls or in my office. So I've got an FHA loan, 3.5% down, 580 credit score on a $300,000 loan amount. That's $10,500 for down payment. And your entire down payment can come as a gift from your family. There's no requirement that you can't contribute your own funds towards the minimum either, right? That's actually a requirement, gift funds or your money. Now, here's the part that most buyers never ask about. Every state that I operate in has some sort of down payment assistance program, whether it is state funded or federally funded, or funded by a private corporation and then marketed nationally. So let's look at what we have here in Montana, MBOH. We've got the CHFA in Colorado. Cal HFA is my home program in California. North Carolina Housing Finance Agency has theirs as well. So stack that DPA on top of an FHA first mortgage, and your gap to home ownership is almost non-existent. The honest conversation is most people who think they can't afford a home haven't actually spoken to somebody with no pressure just to talk, run the numbers, and find out what their options are. That's just a 20-minute phone call. There should never be any pressure from any real estate agent or lender to have that call. You shouldn't feel like you're being pressured into buying or something you don't want to do. If you're interested, hit me up. We'll book a time. We'll discuss your options. And that's all we'll do is talk your options, straight math, no fluff. This is for all my VA borrowers, VA buyers, folks that are trying to sell a home to VA buyers, real estate agents, anybody that's ever held the angst of a VA appraisal. I hear some real estate agents talk sometimes and say that the VA loan is not a great loan. It's actually one of the best loan products out there for veterans and buyers alike. No PMI, no down payment. What more could you ask for? So changes to the VA's MPRs, minimum property requirements, effective May 1st. Here's a big one. 1978 or later, don't worry about that chipping and peeling paint. It is now considered cosmetic and not structural. Now, the appraiser still has room to say that he thinks it could compromise the condition or the integrity of the wood. That's a separate issue. All in all, no longer worry about peeling and chipping paint on homes that are built after 1978. Detached structures no longer have to meet full VA standards unless they affect structural integrity. The VA is moving towards objective safety standards and eliminating these subjective repairs that we've had to combat for years. For my fellow veterans, your benefit just got easier to use. For real estate agents who've been hesitant to accept VA offers, that hesitation is now out of date. The VA buyer is no longer a liability like some folks like to make them out to be. It's a good product. The offers are solid. Really consider it. If there's a problem with a VA appraisal and you want some information on how to combat that, reach out to me. I'd be happy to give you a strategy. Well, that's it. That's my time. That's our week. This was filmed Friday, so if it's a little out of date for Monday, May 4th as far as rates, I apologize. The full breakdown is there. Every chart, every source, every down payment program. It's in this week's issue of the Mortgage Vet Weekly. The link is in the description and on veteranlogroup.com. Just click read this week's issue. If you're a buyer who's sitting on the sidelines, the market right now is worth a real conversation. If you're a homeowner sitting on a rate above 7%, same thing. 20 minutes with me, you'll know exactly where you stand. Give me a call. I'm Paul Messina, loan officer, VA loan specialist, Army combat veteran, Milestone Mortgage Solutions. Reach out and I'll see you next week.